I love the idea of using Bitcoin mining to create energy security, to provide opportunities that don't exist for people in South Africa, in other really remote areas. We're about 86 megawatts, 12 times the load of the city, but it's allowed them to increase the city budgets, decrease property tax, and we employ a lot of people. The city put on their Facebook page that they were excited to announce that CleanSpark was doing this big expansion and we were going to add 15,000 miners. And this woman commented that there's only 3 restaurants and 2 hotels where over 15,000 people going to stay. So
this podcast is entertainment, not financial, tax, or legal advice. Views expressed represent statements of the speaker in their individual capacity, do not represent the views of Unchained, and should not be considered investment advice. Speakers often have personal, family, or business connections to Unchained, which may include direct financial benefits. Please see our disclosure at unchained.com/podcast.
Matt, thanks so much for coming on the podcast.
yeah, absolutely. My pleasure. I appreciate the invite. It's good to finally meet in person.
I know I enjoyed our last podcast, but virtual. So now, great to meet you in person. If someone hasn't listened to our past podcast or hasn't heard you on a panel or another podcast, can you tell the audience a little bit about you and what you do at CleanSpark?
Yeah, absolutely. So my current title, my role is executive chairman and co-founder. So Zach and I got together and started this company as an energy business a number of years ago. We built microgrids, which is, decentralized power for military and commercial companies. And so we kind of grew that business together and recognized the valuable tool that Bitcoin mining is in adding stability to the grid and being a consumer of last resort for oversupplied power, and being able to incentivize clean energy development. So we kind of stepped into the Bitcoin space and then completed the pivot and kind of exited the energy space, and it's been off to the races ever since.
Yeah, I'm sure. I know you guys have historically, CleanSpark navigated the Bitcoin market extremely well. What's your, as an executive, what's your role day to day? I know you said you've been traveling a lot recently, but what are you normally doing?
So we're real collaborative as an executive team. Zach manages the C-suite and oversees the day-to-day operations. My role is more about the capital markets. I deal with the research analysts. I deal with the investment banks. I handle the more of the financing side of our business. And then also, do a little bit more of the PR side of it. The communications team is specifically in my kind of section of the org chart. So, our social media teams, our communications team, we collaborate together to make sure that, we're relaying the appropriate messaging to our shareholders and to the communities in which we operate.
Nice. Do you enjoy, I guess, traveling and doing podcasts and being a public voice for CleanSpark, or does it get tiring sometimes?
No, I love it. I got to do a panel today with Fred and Jason and Tyler, and it's something I'm passionate about. I got into this business, from traditional energy and developed a real passion for energy, and it was an interesting intersection with Bitcoin, and so to have the opportunity to share kind of the whys and hows of what we do our business and what sets us apart and what, makes the meaningful relationships in the communities that we operate. It's something I really enjoy. So I love the travel aspect of it. I enjoy the opportunity to kind of evangelize for Bitcoin mining and, CleanSpark specifically on a, national and international level.
Nice. Yeah, you said you worked closely with CleanSpark's communications team. What key messages are you trying to convey right now? When you guys all sync together, whether it's through socials or panels that you go on or podcasts that you or Zach goes on, what are some key messages that the world doesn't quite understand about Bitcoin or Bitcoin mining that you want to communicate, or CleanSpark?
That's a great question. I think there's a couple of sides to that coin. Everybody hears from a regulatory perspective, there's all of the negative surrounding Bitcoin and cryptocurrency, and it's really kind of misinformation or disinformation. So to communicate effectively the fact that, the underlying commodity of Bitcoin creates opportunity. It's a new kind of money, and to be able to share what that does to give people access to financial markets, but then to also, drive home the scarcity that's part of the Bitcoin algorithm that, if you choose to save your money in fiat currency and we just print more fiat currency, then your savings is worth less. Everybody's read the Bitcoin Standard, but the idea that there's only 21 million Bitcoin really speaks volumes to the idea that, this is something that can be a legitimate store of value. And the fact that it incentivizes energy development. President Biden, when he was elected, talked about the fact that they were going to convert the entire domestic fleet to EVs. And so it's 685,000 cars and light trucks. We already have a broken grid. So how do you add that much load on it? And the answer is you add renewables, but it takes a while to build renewables. And once it's built, it has to be complete before you can get an interconnect with a utility. And that takes time. So the idea that, we can buy that power, we can support that renewable generation while the interconnect developments or interconnect contracts are being completed, we actually are incentivizing and greenifying the grid. So that's a big part of it. Also the kind of misinformation about, what the use of Bitcoin is. There was a story in the media that, Elizabeth Warren talked about how much Bitcoin was used to fund, Hamas and the incident in Israel, and, only to find out that that was in fact not true, and that Bitcoin provides greater transparency and security. So to be able to talk about that and share with people kind of our vision, and then, as a Georgia guy, you can appreciate that, there was a TV program, a news story that was done about CleanSpark, and we've shared it on our socials. And that's a real important message to us that, our expansion in little towns like Washington and Sandersville, in Sandersville, the Economic Development Authority on the news said that CleanSpark's presence has enabled the utility to reduce the electricity costs for the residents of the community. And because of the fact that we pay sales tax on the utility that's consumed in that jurisdiction, that it's increased the city budget to the point that they're now considering decreasing property taxes as a result of what we do for the community. So to be able to share that messaging in light of, all the people that protest, you take water, you take power, you make noise, all these things that aren't necessarily accurate, and to invite people to come tour our facilities, come see what our immersion mining facility looks like right in the middle of 4 high density housing units. And the fact that nobody even knows what's going on in this 70,000 square foot building because it's silent and it's clean. So to be able to work with the team that we put together, Isaac, Brittany, Lenny, myself, we all share a common passion. And that is that, we want to make sure that people really truly understand what the value proposition is to Bitcoin beyond just the headlines.
Yeah. What was the story that you told before of like the older lady that heard that 5,000 or so miners were coming to move to the city? Yeah. Can you say that quickly again? That was
funny. So Washington, Georgia, it's one of my favorite little communities. It was organized. The town was originally formed in 1780, and it was named after the then president of the United States. So the city, there's a ton of history there. The city hall is built on the foundation of the building where they signed the documents that abolished the Confederacy. So beautiful little rural town, about 4,000 people. The entire load, the energy load of the city was about 7 megawatts, and now we're about 86 megawatts. So 12 times the load of the city, but it's incentivized. It's allowed them to increase the city budgets, decrease property tax, and we employ a lot of people. And the city put on their Facebook page that they were excited to announce that CleanSpark was doing this big expansion and we were going to add 15,000 miners, meaning ASICs.
Yeah.
But, traditional logic, and this woman commented that there's only, 3 restaurants and 2 hotels where over 15,000 people going to stay. So it's a cool educational process. We take for granted that people know what we do.
Yeah, that's hilarious to me. I saw this recently regarding CleanSpark and a lot of the other top Bitcoin miners. JP Morgan initiated coverage on this, I guess, a few Bitcoin miners, including CleanSpark. What does that mean? Like, is that a big leap forward? What are your thoughts?
Huge. As part of, my responsibilities in the company, it's communicating with the research analysts, the sell side guys. And Reggie Smith is a really bright guy for JP Morgan. And, you don't have to go too far back in history to see that, Jamie Dimon, the CEO of JP Morgan, is not a big advocate for Bitcoin or historically has not been. But JP Morgan has a DeFi desk where they cover companies that are involved in the DeFi space as well as the payment space. So, think PayPal, whatever. Mm-hmm. And I've developed a bit of a relationship and conversations with Reggie talking about all the things that you and I are discussing. And he and his team put together pretty in-depth analysis of, efficiency of machines, joules per terahash and cost of energy and, which companies are doing it better, who's most efficient, and then based on current market valuation, who's their top pick. And, it was beyond my wildest expectations that JP Morgan would say CleanSpark is their top pick in all the mining space, but it's a huge nod to the execution by Zach and the executive team on the way that they've chosen to operate the business. And then we collaborated. I made a comment this morning on the panel that we don't always see eye to eye. Gary, Zach, myself, Isaac, our team may disagree, and behind closed doors we beat each other up to support the belief or the strategy or the thesis that we may have about any particular topic. But it enables us to really research it and dive deep and find out what makes the most sense for our shareholders, what makes the most sense for the communities we work in. And so to be collaborative and to have the outcome that we did, and then to have a company like JP Morgan say that about us, it's huge. But beyond that, it's massive for our industry, getting the recognition that, the biggest fiat bank in the world is now kind of throwing their hat into the ring and analyzing and providing research. The irony is that I can't get a bank account. I personally can, but CleanSpark couldn't get a bank account with JP Morgan because of the sector that we operate in, but they provide research coverage and analysis and rate us a buy. So who knows?
Nice. Yeah, to me, it seems like a massive step for the industry. It's cool, like looking back over the past few years, I mean, people that were doing research on the Bitcoin mining space and public Bitcoin miners or private Bitcoin miners, it's just regular people. It was like one guy. Now it's like JP Morgan is literally analyzing your company and a bunch of other companies. So it seems pretty awesome.
It's a great opportunity for us to be at this time and space. I mean, it's a brand new industry, like, talking about the woman on the social media about the miners, for people to understand what we do and to be able to separate the facts from the headlines and to see that there's value. The capital markets see what the value is here. And what we're starting to see is, as a result of this research, there's the beginning of institutional investment in our space, which historically doesn't exist. Mm-hmm. I mean, we have, 35 or 40% of our company is technically institutionally held, but it's index funds and ETFs. Mm-hmm. We're now to the point that this research is meaningful, that you'll have large institutional players, the Fidelities and Morgan Stanleys and the BlackRocks through the investment side of their business that are going to start to take meaningful positions into some of these companies. So we're excited about what that means for our shareholders.
Is that like already happening to a certain extent? I guess, like you said, you have 35% institutional ownership, or is like, do you expect it to just really take off over the next, year or two?
So, they're public filings, right? So 13D, 13F filings of institutional investments. So, BlackRock added substantially to their holdings in CleanSpark. They have several million shares, Vanguard, State Street, all those firms. But like I mentioned, those are more index related funds, ESG funds, even to some degree, because we have a focus on carbon neutrality and greenifying our energy sources. But when I'm referring to institutional holdings, I'm talking about Fidelity coming in and taking a 9.9% stake in a company like they do in other industries that historically hasn't existed here. So as that, and I think as part of the maturation with the, I think inevitable approval of the ETFs and then logical, meaningful regulations surrounding our industry to create kind of barriers, to create a roadmap so people understand what you can and can't do and get clarification on what exactly it is the SEC wants, if they know. Yeah. But I think that makes it more an investable space, and I'm excited for what that means because, the fact that we're one of the largest energy purchasers in the state of Georgia, and we're the largest energy purchaser of MEAG, and what that means as far as the contribution back to the community, but also to provide revenue to these little towns, the 49 rural municipalities that invested in to create MEAG as a co-op 45, 50 years ago when Georgia Power went bankrupt. It really is a stabilization for the grid, but it also allows them to recap some of the revenue that they, created bonds to fund all those years ago. So it's a very, very powerful tool when it comes to balancing energy. And I think that, as it's seen more that way, you're going to see relationships where utilities and Bitcoin miners are much more closely connected.
Yeah, I definitely agree. Building one of the top Bitcoin mining companies in the world, what's been something that's very challenging that you didn't expect to be very challenging?
So in the early days of my professional career, I was involved more in traditional energy, oil and gas. And the variability there is the price of a barrel of oil or the price of a billion cubic feet of natural gas. In this industry, you got the variability of the cost of electricity. You got the variability of the difficulty of the Bitcoin blockchain, so the global hash rate, and then you have the variability of the price of Bitcoin on a daily basis. When you layer into that our machines, especially in air-cooled environments, are temperature sensitive, your cost to mine and your output is also variable based on ambient temperature and relative humidity and a number of other factors. So the fact that you're not modeling just around the price of a barrel of oil, it creates complexity into building these models. And I was at an event last night, and one of the industry providers that was there, that probably knows intimately every miner in the Bitcoin mining space, made the comment that we, CleanSpark, have built a team of the smartest people in the room. And Taylor and Brad and the group of guys, Scott, that oversee our mining, these guys are actively working with firmware and software and increasing the output and decreasing the consumption and regulating the temperature, but then also tying that back to effectively a throttle. So when the price of energy on our models, when the spot price of energy is low and the price of Bitcoin is higher and the temperatures are decent, we can step on the gas and make a machine consume a little bit more power but produce more Bitcoin. And the inverse of that is also true. So we, probably unlike most miners, we built models that show what happens if you slow a machine down. Everybody's talking about massive hash rate. Well, we can take a 3,000 watt, 100 terahash machine, so that would be 30 watts of terahash, and we can slow that down to a 70 terahash machine, but it's only consuming 20 watts of terahash. So now we're making it more efficient by slowing down the output. Think of maybe putting your car on cruise control instead of hammering on the gas. And so by having these active models and throttling up or throttling down, not just month over month or week over week, but minute over minute, and to have that flexibility, it makes this business more simplified by having that kind of automation, I guess, if you will. So I guess the complexity of the overall environment would be what I would say is the most unexpected.
Yeah, there's just so many variables, I guess, that make it very difficult to navigate the industry as a Bitcoin miner. And also, I feel like Bitcoin mining, probably like most commodities, has these like crazy cycles where price of Bitcoin goes up so much, hash rate kind of lags because it takes a while to build out that infrastructure, and then difficulty rises, and then price goes back down, and then everyone's like, oh gosh, what have we done? So I guess you've seen similarities between like Bitcoin and other commodities.
Yeah, for sure. We've also used that to our benefit, right? So November of 21, we're sitting on a stack of Bitcoin, and Bitmain comes out with the XP that's, this newest, latest, greatest, most efficient, fastest machine. And, literally $2.5 billion worth of machines are ordered back in late 21. We chose not to jump on that bandwagon. Instead, Bitcoin is in the $50,000, $60,000 price range. We liquidated our HODL. We, being energy guys, kind of looked at the future pricing model, and there's a source you can look up online. It's the Henry Hub. So it's basically natural gas distribution and a forecast over the next 12, 24, 36 months for the southeastern United States. And even though our concentration is on nuclear and renewable energy, electricity prices follow the price of natural gas, just as a normal part of history. So we looked at natural gas futures And it was very clear that energy prices were going to skyrocket. Then you add a couple of $1 billion worth of 140 terahash machines that are more efficient than anything else on the planet. And it's very clear that over the coming 9 months, difficulty, hash rate was going to go up. And so companies chose to incur debt to finance these. So now you're making debt service on a product that you're not going to see for 3 fiscal quarters. And, just looking at it from kind of a bird's eye view with the analysis on energy pricing, difficulty likely going up, and then the volatility that underlies the commodity of Bitcoin, we decided to wait. And so while people were jumping in and paying $80, $90, $100 a terahash for these rigs, we waited until they shipped. And some of these big deposits, now the capital markets kind of dried up and the ability to finance these rigs went away. So we started picking up $100 per terahash machines for $21. And so we built during the bear cycle. So that cyclicality of this space and the volatility really served us to go from 1 exahash a year and change ago to 10 exahash now and 16 within the next few months.
Yeah, I mean, that patience for you guys clearly really paid off. And in hindsight, when Bitcoin's at 60,000 in 2021, everyone's like, oh, it's about to go to 100,000 and whatnot. And fortunately, that didn't happen. And a lot of people paid the price for that. If you weren't working in Bitcoin mining, now, what would you be doing? Any idea?
Yeah, it would definitely be something related to energy. It's, it's something I'm passionate about. Pre-CleanSpark, having traditional energy experience, I'm a father to 6 kids. And so, making sure that we're good stewards of the environment and we use energy, but we do it the right way. We're responsible about it. It's something I care deeply about. So it would definitely be something in that space or sector.
Let's take a quick moment to talk about the Unchained IRA. With the Bitcoin price moving above 40,000, the Unchained IRA is breaking records this month. With a Roth Bitcoin IRA, you don't pay capital gains on the appreciation of Bitcoin. Unchained offers a solution. They make it simple for you to set up a Bitcoin IRA while keeping control of your Bitcoin keys. Use code FRONTIER for $100 off and schedule your free consultation today at unchained.com/IRA. Now back to the conversation. Going back to CleanSpark and really growing and expanding, how do you think about financing CleanSpark? Like, I talked about back in 2021, it was obviously a pretty bad idea to take out a lot of debt and buy a bunch of ASICs. Do you prefer to borrow money via debt, or do you prefer to issue new equity? How do you think about that dynamic?
So we run kind of analysis on whether or not a transaction is accretive to our shareholders, right? So the value of the acquisition is greater than the impact of the dilution. So, earlier this summer, we bought $150 million worth of S19 XPs, and our stock was, $2 and change or $3. So if you do a traditional overnight raise, then your fees to do something like that are 6 to 8%, and it's priced at a discount to the market in order to offset the risk. So we'd be taking capital really cheap, and then there would be a significant overhang because it comes in a lump sum. So a couple of years ago, we did a $200 million raise. So it creates an overhang in the market, puts pressure on the price. The other mechanism that's available is an ATM. So that's utilizing equity, but it's choosing when to utilize that equity in the spot market. So ATM literally stands for at the market. It's not an automated teller machine. So because we announced that, stock price begins to appreciate over the course of the summer. We see the stock go to $5 and $6 and $7. We're then able to lean into that ATM and use equity capital at $7 versus a discount to $3 where we were. So from a standpoint of utilization of equity, that's been one of the levers. The other is, up until midsummer, we used Bitcoin to pay for our OPEX. And then we also did an analysis to determine whether or not it made sense to use Bitcoin or equity for our CapEx. So the third point, you talked about debt, which if it were available, which it's not nearly as available as it once was, the fear by these larger lenders is the uncertainty surrounding halving. So when we bought $150 million worth of machines back in April, if we were to have debt financed that, what the lenders are looking for is an amortization that completes the loan cycle before halving. So now you're amortizing $150 million between April and April. So effectively you're paying cash because the machines are, 3, 6, 9 month deployments. So with the interest rates and the lending environment being what they were, it just didn't make sense for us. So utilization of a combination of equity and Bitcoin really proved to be the right choice for us because we have a spotless balance sheet right now.
Nice. Do you think as if we are going into another Bitcoin bull market, whether it's, now or 6 months from now or 20 months from now, do you think there will be another wave of people getting extremely greedy, borrowing a bunch of money and, probably getting wrecked as the cycle turns again? Or do you think that won't happen this time?
It's a good question. I think that the lack of certainty in a regulatory environment creates that unknown, right? So you talked about the fact that I've been traveling a lot. So I spoke in London earlier this year. We were just in Dubai. We've been all around the world. And it's interesting that a lot of Bitcoin mining companies that are seeking investment capital are using the fact that the U.S. is pushing Bitcoin miners away to incentivize people to invest in companies offshore. And I think as transparency builds into the space and adoption is greater, the government is going to realize, the U.S. government is going to realize that Bitcoin is our friend and not our enemy, and driving it offshore to countries that may or may not be hostile towards the U.S. is probably not the right idea. So I think there's definitely based on history, I would say that there's likely a bull market that's coming. Josh Siegler and Will at Cantor Fitzgerald ran models on which miners will be profitable, have the lowest cost per coin to mine, and who survives post-halving. And they did a really extensive analysis of historical Bitcoin prices post-halving and where it's gone from 30 days post-halving 2 cycles ago to 90 days post-halving this most recent cycle, to the forecast that it's likely to be the peak of the bull market in that 100 to 180 days post-halving this time. So I think that the challenge becomes that, Tether today, they announced they're going to spend $500 million on Bitcoin mining. And that's a comment that the 4 of us got to discuss on the panel today. And Bitcoin mining isn't as simple as buying machines as a commodity and just putting on a shelf and plug them in. As I mentioned, the kind of nuanced approach to running real-time models and energy prices and temperature and output and overclocking and underclocking, it requires a really hands-on approach. And so from CleanSpark's perspective, everybody that touches a machine, that racks it, unracks it, we have repair facilities and labs on site. We do chip level repairs in our own facility. It's all in our control, and all of those people are owners of this company. Every one of them are shareholders. So I think with a company like Tether jumping in and saying, hey, we got $500 million, it's not really that simple buying machines and then just plugging them in and hoping they work. So I think there will likely be an oversupply of rigs yet again. When that happens, I don't know. With the price appreciation of Bitcoin in the last 30 days, obviously the market for rigs is tightening up, demand is going up, but efficiency is also improving. So machines that were latest, greatest state of the art 24 months ago, you were talking a 3,000 watt machine at 100 terahash. So, 30 watts a terahash. The new S21s that we just bought, 4.4 exahash this summer, those are we paid $14 a terahash for those. And they're 15 watts per terahash and double the output in 2 years. Yeah. So if you look at the efficiency of the space, it's going to be tough for the companies that haven't invested in efficiency, that aren't vertically integrated, maybe that have outdated equipment, a less efficient Bitcoin mining fleet. I think hash rate is going to spike between now and halving, but the research guys that I've spoken to, Reggie and Josh, and even like Chardon and BTIG and HC Wainwright, and now we're covered by Alliance Bernstein as well. These analysts all theorize that somewhere between 25 and 40% of the hash rate is going to fall offline at the halving. Now, does it stay offline? Does it stay offline for 30, 60, 90, 180 days? Or is it like last time when, the most common machine was an S17, prices go up, efficiency demands go up, and pretty soon, all the S9s are unplugged, the S17s become a boat anchor, and now it's really about focusing on efficiency. So it's a gamble, right? You want to have the right infrastructure, you want to have the right equipment, you want to have the right cooling properties, you want to have the lowest PUE on your data centers, but then you want to have the most efficient equipment. So I think there's likely to be an oversupply. There's going to be a glut. There's going to be some companies that overextend. Inevitably, it happens. Mm-hmm. I think this is going to be a little different cycle, but I do see that as a real risk.
When that happens, do you guys see yourself in a position to really capitalize on that? Will you be there, or if there's a massive minor capitulation around the halving or 90 days after the halving, would you guys be opportunistic buyers there, or would you be a little cautious to wait to see what happens to the price of Bitcoin?
So I think that's a double-edged sword, right? Because if a company fails and there's this forced consolidation, did it fail because it's poor operations, or did it fail because the machines don't have the efficiency? So I think our collective thesis at CleanSpark is that there's likely to be consolidation, and we would definitely be a player on infrastructure. Highly unlikely that we would buy machines that aren't equal to or greater in efficiency than what we already have. And what we've said is that, when we hit 16, we'll be sub 25 watts a terahash. And then with this big order of S21s, we'll be, closer to that 21, 22 watts per terahash, which I think is nearly 50% of what the current average hash rate is at or that hash price or joules per terahash is at 38 joules per terahash. So I think, there will be consolidation. I've spoken to a lot of miners that are already kind of maybe testing the waters to see what the opportunities look like. I think we will continue to grow organically, find opportunities for infrastructure, build greenfield, acquire maybe existing data centers that we can operate the CleanSpark way. But one thing that Zach is kind of really known for saying is we refuse to grow just for the purpose of growing. And it has to be to grow for the CleanSpark way and to continue to drive value back to our shareholders.
Nice. Yeah, I feel like a lot of tech companies over the last 10 years just wanted to grow at all costs. And that obviously came back to bite many people, whether it's in the Bitcoin mining industry or in any industry. I do want to talk about the ETF some, because you do have pretty awesome capital markets experience. How big of a catalyst do you think the ETF will be, and why do you think it will or will not be a massive catalyst?
So I think Bitcoin price has a lot to do with traditional economics of supply and demand, right? So with the halving coming, the daily supply is going to be cut in half. Demand as a result of these ETFs or the adoption and acceptance of Bitcoin as a store of value or as a payment method is going to continue to drive demand. So I think supply versus demand is going to drive the price of Bitcoin up. When you look at the ETFs, I mean, we're just talking spitball, right? Yeah. Apple has $1 trillion market cap. NVIDIA has $1 trillion market cap. Bitcoin, which is, by most assessments, revolutionary new money and likely to be one of the greater payment platforms in history because of the scarcity, because of the transparency, because of the security. If ETFs create an opportunity where they sell exposure to Bitcoin, they have to own that underlying commodity, right? So if Apple is $1 trillion company and NVIDIA is $1 trillion company and the entire market cap of Bitcoin is 700 million, how much Bitcoin has to be seeded into these ETFs so they actually own the Bitcoin for which they're selling exposure? What does that do to the existing demand? Because we're seeing more and more of these wallets that are cold wallets staying that way. There's not as much turnover. The volatility is going down because there's not as much trading. So I think liquidity is going to be an issue. It's going to drive price, in my personal opinion, not financial advice. But I really think that the potential approval of these spot ETFs and a clear and concise regulatory environment creates adoption for Bitcoin where it's no longer taboo. It's part of, a normal person's investment portfolio because it makes sense. Mm. And I think what that does to the price of Bitcoin is anybody's guess. But, Cathie Wood has pulled out numbers in the, 7 figures. So I think short term, immediately post halving, do I think we go double from here? Probably not by April, but most certainly in my estimation by 60 to 90 days after that. And then you add in, that's given the status quo. So you add the ETFs into that equation, it could go crazy.
Yeah, I tend to agree. I mean, if we do go into another crazy Bitcoin bull market and the price goes to crazy levels, like what's something that most people would be surprised about that you think might happen? Like, will energy companies like we've talked about this before, but like, would energy companies really get involved with Bitcoin mining? Would that be something that might catch a lot of people off guard? Or is there anything else that you think might happen that people would be like, wow, that's interesting?
Yeah, I think a couple of things. I think energy companies and Bitcoin companies would consolidate in some form or fashion. I think Bitcoin miners will end up having zero cost power as a result of those relationships to be that shock absorber on the grid. There will be a mutually beneficial type arrangement with the value of the underlying commodity that's developed with the free power. So I think that there's some unique aspects that could be there. But more importantly, you think about in the oil business, when people invest in oil companies, they hope to get a return on the oil that's produced, but the traditional kind of mentality in the oil business is drill, baby, drill. So you keep the drill going all the time and you never return capital to shareholders. I think this creates a unique opportunity, especially for the public companies, that if Bitcoin, the price to produce a single Bitcoin remains manageable and you're focused on efficiency and you've got that great of a return on investment with the price appreciation of, 6 figures of some kind, I think our industry shifts from being capital intensive, always raising money, to actually returning capital to shareholders, which I know a lot of people would be excited for. Certainly I would, as a shareholder that doesn't sell stock, but it would be, I think it creates opportunities in the capital markets that historically haven't existed.
Yeah. What's something that's like you've, communicating with traditional finance or regulators or whatnot that may not be super involved in the Bitcoin space? What's something that they don't understand that, you're surprised they don't understand, or like that the community or, companies can do a better job of educating people on? Like, what's something that confuses them about Bitcoin or Bitcoin mining specifically?
Well, I think the misinformation about energy, you get a lot of the more progressive side of our representation in Washington, and they hate it, but they don't understand it. And, Jason Less and his team at Riot do a great job here in Texas. They participate in demand response. And so when energy prices are high, they shut off and push power back to the grid. So Riot made an announcement, like it picked up by CNBC, and it said Riot made $30+ million for not using power. That is a huge black eye on our industry because it paints the wrong picture. It's a smart and savvy business decision on their part. It does assist in stabilizing the grid, but it creates the wrong message. It creates the appearance that this company is benefiting on the backs of ratepayers, when that's not true. It's a stabilization mechanism for demand response to avoid the shocks on the grid, but the optics are still bad. So I think collaborating with the larger firms to make sure that the education exists, that people understand Bitcoin creates value, and the energy consumption of Bitcoin and proof of work mining is a feature and not a flaw. It's actually one of our greatest strengths.
Yeah. Going into this bull market, we talked about how like there's a lag typically between like the price of Bitcoin going up very fast and then hash rate being deployed. What do you think it would take for like hash rate to double from where it is today? Like, is that like a crazy, out there, like so much infrastructure is going to be built out, so many ASICs are going to have to be produced? Like, how long might that take for say Bitcoin just randomly went up to $500,000 per coin? How long would it take for hash rate to actually double from where it is today?
It's a good question. The last real aggressive bull cycle in late 21, Bitmain really controlled the industry. They could shut down or slow down production and drive the price of ASICs up just on their own. There's more distribution. It's more decentralized from a standpoint of manufacturing. You got U.S. manufacturers now. You have more flexibility with the rigs, more efficiency, more different cooling technologies, immersion cooling. And it's also growing from kind of a hobbyist space. I mean, we have, I don't know how many hundreds of thousands, tens of thousands, over 100,000, and certainly soon to be more Bitcoin mining machines. And they all have the same form factor, right? They look like a shoebox, because when this industry started out and people built these mining machines, these application-specific integrated circuits, they were designed to be a hobbyist thing, and you could put 2 or 3 on a shelf in your garage.
Yeah.
So the fact that the industry hasn't matured to the point that we're buying blade servers and existing immersion tanks is, proof positive that we're really still in our infancy. I mean, this is a nascent industry. So I think to experience that kind of growth, there's going to be some revolution and some change in the technology, the underlying way that the form factor is and the operations of the machines, the way we build them. It's silly to have 3 hash boards and 7 fans on one machine when you could put a whole bunch of hash boards on a blade servers in an immersion tank and use dual phase immersion and get much more hash rate with much less energy consumption. So I think it's going to be a bit of an evolution. So I don't think it could be something that would happen overnight. There may be, with MicroBT and Canaan and some of these other companies, Auradine, stepping into the space, we're going to have greater supply, but I still think that there's a roadblock as far as the availability for the semiconductors. They talk about the fact that we're gonna start to actually assemble silicon here in the U.S. Right? The microchips will be built here, and we're going to take it away from being centralized with in Taiwan or in Korea. But that process, even to get a chip taping put together, is months, if not years. And so I think there would be a lag, because there would be an inherent skepticism about the current form factor, the current efficiency for people to go all in. There may be hedging a little bit to make sure that they have the latest, greatest, so they don't fall victim to technology advancements like what has happened in the past. So there's definitely a massive increase in hash rate. It's going to continue to grow between now and the halving. Like I mentioned, I think a third of it falls away unless Bitcoin goes parabolic, and then all bets are off, and it could continue to grow at the current rate. So it's a gambler's environment a little bit. I mean, you take a risk, but it's got to be a calculated risk. Otherwise, you're going to be on the short end, like many companies were last time.
Yeah, definitely. Do you see like AI, that's become, a popular thing recently, like ChatGPT and other cool software out there now? Obviously, AI is using a lot of GPUs. They're building out a lot of, not mining farms, but data centers, I guess, effectively. Do you see like AI competing with mining infrastructure? If Bitcoin does go on like that massive bull run, will Google and you guys be competing for like transformers or something, or people that build data centers?
Yeah, I think that's the real risk. It's not Bitcoin miners. It's mass adoption of the servers that are required to support AI. It's unfortunately kind of become almost a joke in our industry that Bitcoin miners that may have less efficient fleets are now talking about, well, we're also supporting all this AI infrastructure. And to think that a Bitcoin miner that maybe has raised $100 or $200 or $300 million over the last 3 years can compete with an Amazon data center, it's just not realistic. So, I think that the demand for power is what creates competition. I don't see that, there's going to be a mass exodus of Bitcoin mining in order to support that industry.
Yeah, fair. One of the last questions, and we can probably wrap it up. CleanSpark obviously is in Georgia. I'm from Georgia. Why pick Georgia? Like, why did you guys decide to build infrastructure there?
So we actually looked at our first data center in College Park through the lens of providing them an energy solution, providing a microgrid solution for a Bitcoin mining company. And Zach came up with the idea that, what if instead of being the energy guys that sells a Bitcoin miner a microgrid, why don't we be the energy guys that buy a Bitcoin mining company and use our energy expertise to do it better than anybody else? And the first community in Georgia, in the city of College Park, we had an agreement for 50 megawatts of power. Back then we had a fixed price deal at like 2.8 cents per kilowatt hour. And the people of Georgia loved us. Georgia is a purple state, right? So you got blue in Atlanta and red almost everywhere else. And so you You have these working class communities where industry has gone away, and we go in and provide really meaningful jobs. And then you have the opportunity to allow these small communities to monetize the investment they made in energy all those years ago. And we've developed a really strong bond and relationship in the state of Georgia. We sponsor college degrees for kids in computer sciences, thinking that we're training our workforce. We're really heavily involved in a number of different community resources to give back. Washington, Georgia, their budget went from $16 million a year ago to $30 million this year, based on the revenue and tax they derive from our relationship. So what that's created is, instead of people picketing and protesting saying shame on you, we have mayors and city councilmen and representatives from little towns saying, hey, can you guys come do that here? So, Georgia's just proven to be a great opportunity for us. It's got very unique power with the Vogtle series of power plants. We, focus on the nuclear part of our mix, but also hydro and solar. But we work not only with MEAG, but we work with Georgia Power, and we also work with some of the small municipalities that are their own utility, like the city of Dalton. So for us, concentration risk is a non-factor because we're spread out throughout the state. So I'm not worried about a single storm taking us down. We have insurance that covers a lot of that stuff. The environment in Georgia, it's a very low altitude, very high humidity. And while you and I don't like humidity because our body's cool by sweating, right? Chipsets don't sweat. So as you're pushing air across the chipset, that humidity in the air dries, decreasing the ambient temperature, actually making a hot, humid environment better than a hot, dry environment. So there's so many factors about why we love Georgia. It's likely we'll continue to grow there, but we're also, Duncan, Zach, Gary, Scott, myself, our team, we have a M&A call every week, and we talk about opportunities both in other states throughout the U.S., but also in other countries around the world. Evaluating opportunities, evaluating counterparty risk, and kind of looking at it through the lens of what's in the best interest of our shareholders, what's the way that we can control the risk, mitigate that risk, and still build, own, and operate facilities that operate in the CleanSpark way. So, it's likely, I would think, that you'll see us expand beyond Georgia in the U.S., but also beyond the U.S. But, Georgia is home right now. We're continuing to build there. We've got 150 megawatts that'll come online in Sandersville here in the next couple of months. So, I think Georgia is always going to be home for us. And, we love the state and these little communities, and they reciprocate. I mean, we go rolling into town with our CleanSpark shirt on and go into these little restaurants, and they won't let us pay. It's on the house. Nice. It's a cool experience to have.
Yeah, I remember visiting like Bitcoin mines in eastern West Virginia, I guess eastern Kentucky and western West Virginia. It's cool to just visit those small little places that are like, wait, you guys are here for mining Bitcoin? They're like, what? It's crazy. What would it take for you guys to actually, expand internationally? Like, what would you look for? Like, are there like specific countries that you would look for, or like, why would you pick a specific country or specific city outside the U.S.?
When we were building microgrids, CleanSpark, pre-Bitcoin, we were actually working with the Minister of Energy in South Africa with the idea that we were going to provide a solution to create community-based microgrids to provide energy security for places where there was energy poverty. The challenge is there wasn't an offtake. There wasn't there were a lot of little mom and pops, a lot of little residences, a lot of community centers that would pay their share to build these microgrids, but the World Bank wouldn't finance it unless there was a commercial offtake agreement saying, hey, I'll buy the power. So I love the idea of using Bitcoin mining to create energy security, to provide opportunities that don't exist for people in South Africa, in other really remote areas. There's abundant nuclear power in the United Arab Emirates. Now the climate is very harsh. Counterparty risk is to be determined, right? If you mine Bitcoin in the UAE, the counterparty is the sovereign fund of the emirate that you choose to do business. So if there's a disagreement, who do you take it up with? You're going to sue your partner, and they also happen to be the judge and jury. So there's risk there, but there's also tremendous opportunity. Europe, obviously had a really tough cycle through the last energy crunch. And so there are areas of Europe that we would consider, more the Nordic regions, that make sense, where you've got, abundant renewable energy. Iceland is a great story, right? So there's a number of places that we would strongly consider, but there are a number of boxes that have to be ticked before we would be willing to take that kind of a risk with shareholder capital.
Yeah, definitely. Well, Matt, I enjoyed this. I'm glad we finally got to connect in person. This is fun.
Me too. Thanks for having me. It's been cool. I really appreciate the opportunity.
Yeah, thanks for coming on.